XRP cools off after a powerful breakout. Bitcoin fires a rare buy signal. Ethereum pushes back above a major psychological milestone. And then, in the background, an altcoin that most people are ignoring suddenly explodes 50% in 2 days. These are not random events. They are signals, and they are happening right now. The question isn't whether the market is moving. The question is whether you understand what those moves are telling you. Stay with me, because by the time we are done, you will understand exactly what is happening in the market at this very moment and what key indicators serious analysts are watching. This is not financial advice, but it is real information you can use to stay ahead of the noise. XRP is currently holding around $2.20, dipping slightly after an energetic run earlier this week. This type of cooling is perfectly natural after a surge, especially for an asset that has been showing resilience despite broader market uncertainty. Bitcoin, however, is the asset flashing the most interesting technical signal right now. On the 4-hour chart, Bitcoin has officially triggered a 13/48 exponential moving average crossover, which many traders interpret as an early momentum shift. It is up about 1% at the moment, and what makes this meaningful is not the number itself but the structure behind the move. Ethereum has regained its footing above $3,000, and that psychological level is historically a point where investor confidence begins to rebuild. Meanwhile, Kaspa has become the standout performer of the week, climbing nearly 50% in just 2 days after its own crossover signal. This is a reminder that no matter how the market feels on the surface, there is always an asset making a significant move. Remaining engaged, watching the trends, and following the data regularly is how you stay ready for opportunities. For the first time in weeks, the crypto fear and greed index has climbed back above 20. That may look like a small number, but psychologically, it is a turning point. When markets move from extreme fear toward even moderate uncertainty, investors begin testing the waters again, and that small shift can open the door to meaningful changes in liquidity and volume. We are heading into a period of the year where volatility typically increases. Holiday seasons, Thanksgiving, Black Friday, and the month of December often create unpredictable trading environments, but they also create opportunity. A rising sentiment index indicates that investors are slowly returning to the market, and when behavior begins shifting from hesitation to participation, momentum can follow. XRP's ETF inflows have slowed slightly after their explosive first few days, but this is expected during a new product's launch phase. What matters is that XRP remains on par with Bitcoin when it comes to inflow behavior, which is noteworthy considering Bitcoin's dominance in institutional conversations. Yesterday, Solana surprisingly recorded an outflow, marking a tactical repositioning from some traders. But the headline that caught the most attention came from Nasdaq. They have officially filed with the SEC to raise the options limit on BlackRock's Bybit Bitcoin ETF to 1 million contracts, the maximum allowed. That single move has the potential to increase liquidity, trading activity, and volatility around the ETF, and it may very well be one of the reasons Bitcoin has seen renewed energy. Whenever BlackRock touches the market pays attention. High option ceilings can influence price behavior, and investors are already preparing for what this could mean in the short and mid-term. The SEC has just released a revised 2025 regulatory blueprint that emphasizes clearer rules and more structured oversight for digital assets. This is the type of development that institutional investors have been waiting for because clarity breeds confidence. When the rules of engagement are defined, capital feels more comfortable entering the market. Ripple is moving strategically in this environment. RLUSD has officially been greenlisted by the Abu Dhabi Financial Services Authority, opening the door for it to be used as collateral and for lending, brokerage, and settlement activities across one of the most important financial hubs in the world. Ripple has been strengthening its presence in the UAE for years, and this step signals another major milestone in establishing RLUSD as a compliant settlement asset for global finance. This is not a small win. It demonstrates alignment with regulatory expectations and positions Ripple for deeper institutional integration. A sobering reminder surfaced this week when South Korea's Upbit exchange reported a $36 million exploit on the Solana network. Upbit has confirmed that customer funds will be reimbursed, but events like this always influence sentiment, especially in regions with strong communities, including South Korea, which has one of the highest concentrations of XRP supporters worldwide. Short-term pullbacks are not uncommon after incidents like this, and they serve as a reminder to remain vigilant. The crypto space is growing, but so are bad actors. Protecting your assets begins with simple discipline. Do not click suspicious links, do not engage with unknown accounts, and never share sensitive information. The market rewards those who participate wisely. One of the more interesting indicators this week comes from Total 3, the market index that tracks all altcoins excluding Bitcoin, Ethereum, and stablecoins. Total 3 has just closed above the daily money flow indicator, often called the money noodle, for the first time since July. Historically, when Total 3 crosses this threshold, it signals a period where altcoins begin outperforming Bitcoin. While this does not guarantee a broad altcoin rally, it is one of the early signals analysts look for when evaluating rotation cycles. If this trend continues, the market could be preparing for a broader altcoin resurgence. The most compelling development came from the macro-financial side. Prediction markets are now pricing in Kevin Hassett as the leading candidate to become the next Federal Reserve Chair. This matters because Hassett is widely viewed as dovish, supportive of quantitative easing, and favorable toward rate cuts. Crypto assets historically thrive in environments where liquidity increases and borrowing costs decrease. Add to this the fact that quantitative tightening is scheduled to end on December 1st, and you have the early stages of a macro environment that could favor digital assets. If prediction markets are correct, this could explain why crypto saw a sudden jolt of momentum. The market responds instantly to shifts in leadership expectations, especially when the potential leader supports policies that enhance liquidity. What we are seeing now may be the first reaction to that possibility. Crypto is a market that responds instantly to news, global events, regulatory updates, liquidity changes, and shifts in sentiment. That is why staying informed is the most valuable skill an investor can develop. When you understand the signals, you stop reacting emotionally and begin interpreting the market with clarity. If you want deeper insights, daily analysis, and a community that navigates this space together, make sure you subscribe and join the conversation in the comments. Your perspective matters, and together we can make sense of what is unfolding in real time. This content is for educational and entertainment purposes only. Always conduct your own research and make decisions based on your personal strategy. Stay vigilant, stay informed, and stay ready. I will see you in the next update.